Hey, Sasha, the options coach here. And in today's video, we're going to take a look at how to trade markets at all-time highs, kind of without fear. A lot of people, when they're trading positions and they're worried about, hey, the market's at all-time highs, I probably shouldn't put on something bullish, or how do I trade this thing? And, I think one of the easiest ways to go about it is, number one, just reduce position size. So if you trade 100 shares, go down to 50 or go down to 20. If you trade 5 contracts, go down to like 3 or 2. And if you're doing like vertical spreads, if they're, let's say, $3 wide, you can go down to $2 wide. Or if they're $5 wide, go down to $2 wide. So those are a few simple ways. Another way to do that is to kind of offset something to give you room on the upside. Like if you still want to be a little bullish, but kind of hedge it off a little bit. And that's what I want to show you, something a little deeper, because in this, in the videos that I share, it's usually a little bit more deeper, thought-provoking things than just kind of fluff type stuff that I try to get to. So anyway, I'm going to share this with you here, and we're going to go in and take a look at it. I'll show you with Nvidia, because Nvidia usually makes some, it keeps running up and running up and running up. You can do the same thing with the market, like SPX, QQQs, and other stuff, but I'll show you with Nvidia as a general guide or concept. So this stock, if we look at it, has went from here all the way to here, and you're like, man, I don't know if it's going to keep going higher for this amount of range. And because of that, you're like, well, I might be scared to put on a position. I still think it's going to go up. I just don't know if I want to get that much exposure on it or as much money or capital. So here's a little trade idea to do on Nvidia. So what we're going to do is we're going to do a similar concept with an at the money vertical. I'm going to break this apart though. So normally I could just put the position on together and not worry about it. But here I'm going to just go in and just do it kind of all at once. So what we're going to do, or break it apart, we're going to go in and kind of like an at the money vertical, we're going to go $1 wide. And here we're risking like 48 bucks to make 52. Not a whole heap lot. But then what we'll do is we're going to sell some stuff against it. And I'm going to go in the same type of thing, 134, 135. So it's about a 20 delta. So we're going to collect some pennies here. So I've got kind of like a directional iron condor. So this is kind of one thing you could do. So step one could be a directional iron condor. Step two could be actually to do 2 contracts of this. And what you're doing really is you're risking about 18 bucks now instead of the full, 48. You're risking about 18 bucks. And if this continues to head higher, then what's happening is slowly it's decaying, okay, the extra contract there, and you're creating like this little bubble as it's kind of heading higher. You're getting into your sweet spot, but you're also going in and just kind of making money from that theta decay. Now that assumes it kind of stands still a little bit for a couple of days, or even goes up and then pulls back slightly, because it could go up and then pull back. But what you're saying is I'm okay with a little bit of upside. I just don't want it to explode to the moon. And this also covers the downside quite a bit, because you're only risking really 16 bucks. Think about it. You're risking 16 bucks to make like 85. So if we ramp this up to like 20 contracts, and then what we can do is, if you're trading larger sizes, you can actually bump this quite a bit. So depending on how much risk you want to take, obviously I wouldn't do it all in one spot, but just to give you a little idea, you can almost, let's say, risk 212 to make one, about 1,500 bucks maybe. And if you wanted to, you could also go 125, 126. That'll get the cost down a little bit more and just be a little bit cheaper. And then I might even bring this 133 to 134, because I'm doing a little bit larger size. And now as it kind of gets in there, so it just depends on risk to reward here. As it gets in there, you might make, who knows, let's say 1,000 bucks out of 140 on the risk on over here. The downside here, of course, is if it shoots up very quickly, that's a little bit more dangerous. But if it starts decaying here a bit, even if it just stands still because you've sold a bunch of extras, you could actually just get out with like a $200-300 profit. So it's one way to kind of take a look at things like this, and we just send it in. And normally you would send them all in together, and it would be a smarter approach. But that's how you could play these markets a little bit more to the downside, to the upside when the market's at all-time highs, simply because you might be a little bit cautious. You're saying, hey, you know what, I'm a little worried about this thing maybe heading down or to the downside. So anyways, thanks for joining me. I hope you enjoyed the video. Grab some worksheets down below and, make the most of it. Continue trading, education, and keep learning. Anyways, thanks again, and I'll see you in the next video. Take